Hi, Jonathan York, Bay Financial Partners, looking at investment markets. Another pretty interesting week for President Trump. Obviously, you've still got the ongoing fallout from the firing of the FBI Comey. It just appears to be that Trump looks like he's jumping out of sort of one frying pan into another. You've got that sort of political fallout. We're still yet to see anything coming through on sort of healthcare and also his tax revisions and tax plan going forward. And now got the latest sort of political conflict going through with his latest meeting with the Russians, and supposedly, potentially, he shared sort of highly classified and confidential information with the Russians, which really hasn't gone down too well on the Hill. US markets, though, seem to be sort of pretty much ignoring the sort of ongoing shenanigans at the White House. The data is still reasonably strong from the US. The unemployment data is still pushing on at a pretty good rate. Corporate earnings are okay. And, the market still seems to be sort of setting itself up for a further rate increase from the Fed in June. And then at least one more before year end. Now, obviously, if that is the case, that puts a little bit of further pressure on sort of global interest rates, and it'll just be interesting to see how the rest of the market sort of react to this tightening in the US. Oil's had a little bit of a bounce as they try to talk it back up from sort of recovering sort of mid 45s back up to around sort of 48 and a half dollars a barrel now on WTI. Still sort of struggling to get through 50, and it's really sort of classic sort of supply and demand. Present, the market is oversupplied, and it's just going to be very interesting now to see how it pans through in the second half of the year. Here in New Zealand, the Reserve Bank met last Thursday. No real surprise in the fact that rates were left unchanged, but probably what was surprising was the commentary and sort of rhetoric that rates are really still on hold until sort of 2019. Certainly most analysts and economists are, viewing that inflation is sort of picking up. Housing prices have come off the board a little bit, but there's still plenty of inflation in the marketplace, and it's just going to be very interesting to see with inflation now back at the sort of target level around sort of 2% and looking to push on a little bit higher than that, whether the Reserve Bank can indeed sort of keep rates at these levels or whether it has to move a little bit sooner than anticipated. Genesis have got a capital bond in the marketplace, 5-year reset. Minimum rate will be 5.7. If you're interested in that, call us on 0800 867 323. Brexit still rumbling along in the background. Certainly market breathed a little bit of sigh of relief when Macron was elected in France. That was certainly a pro-European vote, and it's now just a question of waiting to see the nitty-gritty and the hard negotiations going forward. Certainly Europe's growing at a pretty reasonable rate, though. The market is sort of picking up. Economy is picking up, a little bit of growth going forward. And certainly some of the sort of problem countries, sort of Spain, Portugal, Ireland, are showing some pretty decent growth at current levels. As always, in New Zealand, if you're looking for income options, there are plenty of options out there in terms of dividend shares, etc. And if you're interested in discussing what's available, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We look forward to speaking to you soon.